The following podcast was recorded on Friday, May 20th, 2022, featuring Sam Rines of Arbor Data Science. To hear the podcast in real time, you can sign up for a free trial at arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest edition of Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Sam Rines of Arbor Data Science. Welcome, Sam.
Hey, Kristen, thank you for having me.
Good to see you. Today, Sam covers numerous stories lurking underneath the surface. To start us off today, Sam, let's talk about worker shortages. They're all across various industries, but specifically, what's happening in tech?
Yeah, it's really interesting because it was like, we had this and still have this narrative of you can't find enough workers, you have to offer higher wages, better benefits, and you continuously hear that across mostly leisure and hospitality and trucking, those types of jobs. But lurking underneath the surface has been this really interesting commentary that we've heard a lot, particularly from tech companies, that during COVID, they really ramped up their investments in people and their ability to deliver products and services. And to a certain degree, they're feeling a little overstaffed, not understaffed, or at least fully staffed. I think that's basically a term for we're not going to hire any more people. It kind of started with Peloton, not too long ago. That was a darling of COVID, right? If you couldn't go to the gym anymore, you could kind of get a gym feeling by buying a Peloton bike and kind of being with other people, being with an instructor, but in the comfort of your own home and safe and sound. I think that is kind of a story that we're all very familiar with. But then they began to struggle as places began to reopen. You could go back, you could begin to go to Pilates again, go karate, et cetera, et cetera. This to me is they didn't sell bikes, and so they had a ton of inventory, and then they laid off a significant amount of their warehouse staff. They just didn't need them anymore. Then you had Amazon announce earnings and say that they were at least fully staffed, if not somewhat overstaffed. And then you had Carvana that with layoffs, and then this week you had Netflix with layoffs. So I think there's a number of things lurking underneath the surface that were kind of masked to a degree by COVID, right? You needed a lot of workers to ramp up the stay-at-home lifestyle. That's not necessarily the case anymore. What's really intriguing about these charts, and I don't think this can be really overemphasized, is when people feel good about their jobs, they tend to quit, look around, do something. When you had COVID to the left of this chart, you saw a plunge in job searches, right? People just wanted stability. They wanted to remain where they were. And as soon as COVID began to kind of be a non-issue for tech workers, work from home, et cetera, work from anywhere, it became something where people began to search again. And then you have Omicron surges and things like that, that once again, people begin to lock down, not search for jobs as much. You're beginning to see people stop searching for jobs, particularly in Boston, and you're probably going to begin to see that San Francisco job search begin to pull back a little bit, right? People are going to want to feel a little bit safer with the number of tech layoffs we can see.
So speaking of the different worker groups, what if we focus on millennials next? Tell me, what portion of the workforce do they make up? And specifically, we had a really turbulent few weeks now in crypto, and millennials seem to make up a large percentage of that crypto space. How do those tie in together?
Again, it's a really intriguing thing, because you had this, again, another narrative that millennials weren't going back to work. Gen Z, they weren't getting jobs. They were all trading crypto in the basement. Well, in reality, you're actually looking at millennials almost being back to pre-COVID levels of participation in the U.S. labor force, and they're the largest segment of the U.S. labor force. So that's a very important driver of overall worker availability. So that narrative, I think, was always a little bit shaky. Yes, millennials had exposure to crypto. It was a significant driver of their incremental wealth gains during COVID, but it wasn't something that was keeping them home. And the interesting thing on the side, back to the whole tech narrative, is that there were a lot of jobs created in crypto during the last 2 years during the COVID scare. That is something to pay attention to as well, because it rolls into the narrative of do we have a worker shortage, or did we overhire in certain areas and now we're going to transition some of those workers back out of those areas.
And what role does the Fed play in all of this?
It's interesting. There's that saying that high prices are the best cure for high prices, when in reality, sometimes the best cure for high prices is higher unemployment, which is something the Fed doesn't really want to admit, that if you're going to begin to tackle the problem of inflation, you're probably going to need the unemployment rate to rise and have some significant demand side destruction, right? You're not going to have the supply side reaction to alleviate it. It's just that, I think it's that simple. It's very, very difficult to, we go back to this very, very frequently. You don't really create more farmland with monetary policy. You don't drill oil wells with monetary policy. That's going to be something that I think is a little bit of a black eye for the Fed, that they're probably going to have to push unemployment up if they really want to tackle the inflation side of the problem. And another interesting piece there that I think gets overlooked a lot as well is the number of construction jobs that we have, particularly on the home building, et cetera. Those are likely to, again, become a little bit under pressure given interest rates and what we've seen beginning to happen in the housing market. We've only had mortgage rates rise to about 5.5%, give or take, and you have the highest payments on a median-priced house ever. So it's a pretty big limiter of the incremental demand for housing. That, to me, and the worker pivot, right? The construction, a person who is good at construction can drill an oil well. You have a labor shortage in housing to a degree, but you also have a massive labor shortage in the oil patch. Last time you saw a housing crash, a lot of the workers were absorbed into oil and gas and trucking. So if you begin to have another crack in the housing market, that could actually alleviate some little pockets of labor shortages that would be helpful in alleviating some price pressure.
In summary today, Sam, what should we be watching for next?
I mean, over the next couple of weeks, I think the debate is really going to shift to the health of the U.S. consumer, particularly after we saw some pretty nasty price action in some of the stocks this week. I mean, Walmart, Home Depot, Lowe's, Target. They all reported, a consumer was beginning to pivot, right? They weren't buying as many, call it large goods. They were buying a lot of staples. They were buying the things they needed, and that to me is a real trend. It doesn't mean that the consumer is broken. I think that's a little bit of a stretch here. The consumer is not broken yet. The consumer is still spending, but they're just paying a lot more for the things that they need. They're not paying more for the things that they might have wanted.
Well, thank you, Sam, for your thoughts today. We appreciate it. And thank you, everyone, for joining us. As a reminder, we are client-driven. If you have any questions or feedback on future topics, please let us know. For further information on Arbor Research, Arbor Data Science, or Bianco Research, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day, everyone.